Cathie Wood has for a long time now supported the idea that we are actually in a deflationary cycle. She says current inflation is basically irrelevant because in the long term, deflation will win out due to technological advance in areas like robotics, GMO, genomics, AI, and DeFi. She's been a vocal supporter of the idea that strong bond prices are an indicator of this. She basically says that the bond market is sniffing out deflation and that it will soon emerge and be stronger than the inflation that we are already seeing. In short, she says that inflation is due to supply side shocks, the cost of shipping rising, the microchip shortage, natural gas and oil prices rising, and that in the long run, these will all subside. But so far, she's been wrong. She went out on a limb and basically said that oil prices would never rise to above $70 a barrel again, but they have now risen to that point. She said that inflation would come down far quicker than it has, but really, it's not showing any signs of slowing down yet. The question that's on my mind, and I'm sure it's on yours as well, is has she changed her tune? And that's what we'll find out today. She gave us another market breakdown for the last month, and we're going to show you that footage in a moment. But really quickly, if you're new to the channel, make sure to subscribe. If you want to help the channel grow and ensure we can continue to make content like this, then consider helping us out through our brand new Patreon. Link is down below in the description.
If we're right, then what we're going to see is prices coming down. I think of Wile E. Coyote running to catch up, as businesses have, and only to look down because the demand is not going to be as high as businesses expected. We are already seeing some prices come down. I've mentioned lumber. Since May, it's dropped 64%. Copper, 15%. Iron ore, think China in particular, down 51%. DRAM prices, so chips, down 20%. We've seen the dollar go up 5%. All of this is from the May-June time frame. These are all big anti-inflationary forces. They are also an indication when prices start going down, anyone who has excess inventory is risking inventory losses, losing money on their inventories. So sometimes they will sell into that kind of price decline, exacerbating it. And I believe we're going to see a lot more of that. What's going on here with oil that's so different from other commodities? Well, I don't think it's that different. I think China is going to have an impact on the oil price, especially now that it is shutting factories down in order to prepare for the Winter Olympics in February. They want a pristine environment, and as you know, they will have to work very hard to achieve that. So they're starting already. And as I mentioned before, there's a lot of uncertainty around the policies in China. But one of the things that I've been saying for quite some time is we do think the demand for oil globally has peaked. We think that it peaked in 2019. In 2019, it peaked, we believe, at 101 million barrels per day. We've rebounded this year to roughly 98 million barrels per day. And we would be surprised if we got back to the 101. China's part of the reason, and then the other very important reason is the shift, and we think it's taking place at an accelerated rate from gas-powered cars to electric vehicles. We think deflation is the greater risk. And I know that's not a very widely held point of view. In fact, I don't think I know anyone who has that point of view. But you've heard some of the cyclical dynamics that we think will take inflation down. And we think secular dynamics will as well. Good deflation, that associated with disruptive innovation. And the statistic, I'm not sure if I mentioned it on the last call, but that blows my mind is artificial intelligence training costs are dropping 68% per year. Think about that. That's massive deflation. That's a huge undertow. And And then the other side of disruptive innovation is creative destruction. So those companies who manufactured earnings by leveraging up to buy back their shares are probably didn't invest enough in innovation and are going to see the results, we think, during the next few years. They will have to service their debt by cutting prices. Many people raise a couple of indicators to say, well, how do you deal with this as an explanation, given your view on deflation? Rents. Yes, rents are going up. But if you think about it, where's the great migration taking place? It's taking place from the very high rent areas of the world. So New York City, Silicon Valley, California, tri-state area. And the migration is to lower cost places and with lower rents than in those big cities. So I think that mix effect is going to help. And then the other one is on wages. Wage inflation, if you look at average hourly earnings, I think they were up 4.3% in the last employment report on a year-over-year basis. How do you overcome embedding 4.3% into the inflation rate? The way you do that is with productivity gains. And we believe that productivity gains are going to pick up significantly as our disruptive innovation technologies sweep through. And we think the changes are going to be massive during the next 5 to 10 years, with S-curves feeding S-curves feeding S-curves, and leading to tremendous productivity gains. So that's a win-win. Wages going up, productivity going up, will, I think, on a company-by-company basis, depending on their pricing power, they will either see share in the gains with higher margins, or maybe their margins will get hit if the pricing power is not there.
So if you're familiar with Cathie and you've heard her talk about deflation versus inflation in the past, nothing she said there should really surprise you. Commodity prices are falling in lots of different areas, and according to Cathie, that's deflation at work. She also thinks that technology should start evolving at a pretty incredible rate, and that we'll have S-curves feeding S-curves, causing incredible amounts of deflation as products get cheaper all around the world. The idea that Cathie is pushing here is that technological advance will be so overwhelming that it will overpower inflation and cause our money to actually get more valuable, not less. But despite that idea, money printing or quantitative easing or even helicopter money going on in the US and all around the world is still occurring, and inflation is still very high. The products that are now seeing less inflation aren't actually decreasing in price, and they're certainly not falling down back to pre-pandemic levels. The question is, will they continue to fall further? Well, some things will, but some things definitely won't. Wage inflation, or basically salaries for example, does not disappear. Once wages go up, they do not come back down because employees don't like to take wage cuts. Now, this event of sticky inflation, where when prices go up, they refuse to come back down, may be strongest with wages, but it happens all over the world in all different types of companies. Do you think that McDonald's will be willing to drop the prices of their hamburgers once they've raised them? The simple answer is no. Now, because wages are so sticky, because when they rise, they never really fall back down again, it makes them one of the most important inflationary figures to look at. Cathie obviously knows this. She's a very well-educated and successful economist, but she justifies this sticky wage increase by saying we will get more productive in the future. The problem with this line of thinking is that we might get more productive in the future, but we aren't right now. We aren't more productive today, and yet our wages are still higher than they were. That is wage inflation in action, and as I said before, it's not going to disappear. Now, while she may be right that in the future our productivity will rise to the point where our wages haven't actually increased by an unproportional amount, that may be true in the future, it isn't true right now. Right now, our wages are up higher than usual, and yet our productivity isn't. That is wage inflation. Now, I know that lots of commenters think I'm being pessimistic here, but the truth is, I don't think of myself as pessimistic or optimistic, but realistic and pragmatic. Inflation is high all over the developed world. In the UK, in the USA, and in Europe, inflation is above usual rates. Supply side shocks are real, but they're not slowing down. They're not disappearing as the Fed and Cathie told us they would. They're actually getting worse by the month. There's also the fact that for technology to develop at such an incredible rate to cause real deflation, it has to be so ridiculously revolutionary, and that's just very unlikely. We're talking Internet 3.0 every 5 years. This kind of revolution has happened 2 or 3 times in history, and it's always taken 20 to 30 years for it to play out in full and really affect our productivity and cause deflation. Cathie's hypothesis here is that it will happen in 5 years, and I think that's just a little bit unlikely. Ultimately, you can say that deflation will happen in the future, and no one can tell you that you're categorically wrong. But you can't say that it's here now, because it isn't. Inflation is here, and it's remaining far stronger than we were told it was going to be. I want to thank those that have joined my Patreon. I've just set it up this week, and I'm hoping that it gives me more financial security and allows me to continue making this kind of content. So if you like these videos and you want to help support the channel, then the link is down below in the description. If you remember, just a couple weeks ago, I almost had my channel deleted by YouTube, and this is one of the things I promised I would get set up so that they can't threaten me like that again. You can help support the channel for just $1 a month. You get access to loads of extra stuff that isn't here on YouTube. And once I reach 100 patrons, I'm going to hire a video editor to help me get more content out every week for you. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. I really do appreciate all the support you give the channel, even if it's just leaving a like. There are also links to my other channels, Stoic Economy and Stoic Crypto, that you can check out below in the description as well. In the description, there's also a link to my favorite brokerage called eToro, where you can trade stocks and shares, crypto, commodities, foreign currencies, and more, all for 0% commission. And there's also a link down below in the description to BLOCKFI, where you can get up to $250 in free Bitcoin, and you can earn interest on whatever crypto you hold, whether it's Bitcoin, Ether, or even stable coins. You can earn as much as 14% interest a year. Thanks for all the support recently. Thanks for watching. Until next time.